Hi, everyone. Welcome to your latest Carson's Take 5. Ryan and Sonu here. Sonu, we're going to get into it. A lot of stuff going on out there, a lot of fear. The last couple of weeks, we've talked about those fears. But the time we're doing this, stocks are virtually back at an all-time high. They're not quite there yet in the S&P 500, but they might be by the time people watch this. So we titled this week, Back to Your Regularly Scheduled Bull Market. I guess how surprised are you? We were down almost 20% this time about 10 weeks ago, right?
Yeah, if you'd asked me, would we be here 10 weeks ago, like you said, I probably said no, but a lot has changed, right? Like the tariffs were paused, right? And inflation numbers, we haven't seen tariff inflation yet, which is not to say it's not coming or it may be coming. It's not here yet, but of course, it's early days yet. We've got May inflation data, April inflation data. So far, the tariffs haven't shown up, right? Of course, somebody's paying the tariffs. That's the thing. Someone's paying the tariffs because government tariff revenues have gone up a lot. It's at record highs compared to anything we've seen over the last few decades. And so it's not foreign exporters paying them because we know those prices are being passed here. The question is, who's paying it on the state side? Is it businesses or is it consumers? I think that's what the Fed is waiting on. But should we see tariff inflation sort of muted? I think that's another potential tailwind coming in the second half of the year, which are rate cuts. We could get rate cuts from the Federal Reserve, and that's a positive.
So let's hold on the rate cuts. Maybe we'll dive a little more into that. You know, I think one thing, if you listen to these very weekly videos that we've done, we've talked about the rest of the globe has been really strong. I mean, one of the themes I've talked about, and some of you have too, we thought the U.S. would hit new highs this year. We were saying this, a month ago. Because the rest of the globe was hitting all-time highs or 52-week highs. In a way, the U.S., yes, we lagged. The first half of this year, we lagged. Well, we led by a big margin in 23 and 24. That baton being passed around. We're optimistic that the U.S. is going to kind of take the lead again the second half of this year. So to be making new highs isn't all that surprising. Now, one more, just something to think about for investors out there. The month of July, historically, is a pretty good month in the summertime. Usually summer's not all that great, but summer, July is good. In a post-election year, where we are now, it's actually the best month of the year. Now, we would never blindly invest just on the calendar, but it's interesting to know. One more thing to know. May, I'm sorry, wrong month. Yeah, May. It was May. May, we're up over 5% on the S&P 500, one of the best Mays we've seen in a long, long time. And time we're doing this, we'll see where we go, but it's looking like June is going to be higher also. Normally, Sonu, those 2 months aren't higher, okay? But when those 2 months are higher, like we're probably going to see in 2025, what does it mean for the rest of the year? It's good news. 16 times this has happened. The rest of the year, so the last 6 months of the year, have been higher. Ready for this? 15 out of 16 times, up almost 9% on average. It's like double the average return for the final 6 months. So a long-winded way of saying the strength we've seen in normally weak-ish months is just another clue, another building block to why this summer rally probably can continue. But honestly, for everybody out there listening, might have a good second half of the year. How are we doing time-wise? Yeah, we got another 3-4 minutes. You want to talk about the Fed, or what else you want to talk about?
Yeah, maybe just summing up, and then we can go to the Fed as well, because, what you just said, essentially, I'll boil it down to one word, momentum.
Yeah.
Right? Market's got momentum, right? So that it has that going for it. We have, after including dividends, what's incredible is we're less than 0.5% away from all-time highs. That's incredible, right? And that gets to what happened over the last month, probably about 5 weeks or 6 weeks ago, when the tariffs on China were paused. And, we're still waiting for trade deals. We haven't gotten any, but, dare I say we'll get another 90-day pause. And I think, market's expecting that. Market's not expecting, we're going back to Liberation Day tariffs. I don't think anyone's expecting that. So that tail risk has been taken off the table, hopefully, right? But I think that's what markets are pricing in. So we've got momentum, we've got tariff policy, hopefully not as bad as it was 2 months ago. And we got the potential for rate cuts if inflation doesn't show up. Now, that's a big if, but that's what, the hope is. And while that happens, the other side of it is hopefully the labor market doesn't break, right? Yeah. Now, if the unemployment rate goes up, we'll get rate cuts sooner rather than later, I think. But then we have bigger problems, because once the unemployment rate starts to really go up, with some momentum, it's hard to get it back down. So far, it's okay. I'm not saying the labor market is great. That's one of the concerns. There are some cracks there, but that's all it is, some cracks. it's not cracked, if that makes sense.
Yeah, I mean, listen, if you get bored someday, everybody, you can, look up the unemployment rate. And like Sonu's saying, it stays low for a long time, but once it gets momentum to the upside, it can really move. So that's something we are watching extremely, extremely closely here. The other thing, what we focused on last week, right? The Middle East, between Iran and Israel, and the United States strikes Iran, and all the worries and fears around that. By the time someone listens to this, might have egg on our face, but we're optimistic again, Sonu. Like you said, maybe we're getting some better news, so some deals there, maybe less missiles at each other, to be blunt, and that's just one more reason to maybe be a little more on the optimistic side the second half of 2025. Sonu, we've got like a minute to go. How do you want to wrap this up?
Are we just telling everyone to go enjoy the summer? It's hot.
Yeah. It's hot.
Get some cool drinks and put some lemon in it.
By the way, how's your air conditioning? Son and I did one of these the other day. He was sweating. You're not sweating as much down there as I look at you.
No, the air conditioning's working. I don't have to put my fan on, which is good.
You looked terrible the other day. He was literally sweating. I felt bad.
Speaking of summer, and summer tends to be quiet, right? The last thing, I'll leave it up to, you can finish this off. And usually when things are quiet, that's good for markets, right?
No, exactly. I mean, light volume, let's hope the headline risk. I mean, for whatever reason, August tends to have that headline risk. If you remember last year, we talked about it, the yen carry trade unwind. So maybe let's give you aware August can be a little more volatile, but I'll tell you, things look pretty good. It's a global bull market. We've got new all-time highs in industrials and in NASDAQ 100, financials. I mean, there's a lot of groups that are leading that you want to see leading. This is a healthy bull market. It still looks like a bull market. We are aware of the risks that are still out there. We are aware of the headlines that are still out there. But from an investment point of view, give yourselves a pat on the back, because 10 weeks ago, everybody was panicking. Not everybody, but a lot of people were panicking. We said, listen, if we can avoid the comet one more time, we might have a pretty good rally. We didn't expect a rally like this. We are not complaining. So enjoy yourselves this summer. Congratulations on not panicking in those lows like we discussed back then, and stay cool and enjoy the air conditioning. And with all of that, this again was the latest Carson's Take 5. Ryan and Sonu, back to your regularly scheduled bull market. See everybody next week. Thank you.